So hello and welcome back to School of Stock Market everyone, and we are back with another stock research for all of you. And today the company under consideration is POLYPLEX Corporation Limited. So before starting the research, let me tell you how this video is planned. First of all, we are going to share some detail about the company's business. Secondly, we are going to share company's financial figures, and finally we are going to share a short analysis that we have conducted on the company. So let's start the research. So POLYPLEX Corporation is engaged in manufacturing of BOPP, blown PP, PE and CPP films used in flexible packaging industry and in industrial uses like release liners, tapes, labels, etc. So this company is producing different kind of product. Mainly you can name three products, right? First are the packaging product, the flexible packaging product. Second is tapes, and third liners and labels, right? So what are these flexible packaging products, right? So let me explain it to you. Many of you have seen in your life that when we order something, we receive those things packed in boxes or cartons, right? Different size and shape of cartons and boxes are there. The problem with that type of packaging is that those cartons and those boxes are of a certain shape and size, right? So only the products which are of the same shape and size can fit into those boxes and cartons, right? This is the different type of packaging, flexible plastic packaging. These gets wrapped around the product, right? Despite of the shape or the size of the product, these labels or these films just gets wrapped around it, right? And protected from the external environment. Now, the very unique thing about this company is that this company has experience of 33 years in such manufacturings, right? And apart from that, they have 6 manufacturing facilities which are located in 5 different countries. They have multiple warehouses and license offices worldwide. So why this is important? Why they are having different manufacturing plants in different countries is important. Why their multiple warehouses is important. Why their license offices around the globe is important. The reason is simple. This improves their supply chain. Suppose a company who has manufacturing plants only in India and now they want to supply something to Spain or something to America or say Caribbeans. So what they have to do, they have to use extensive logistics which increase the cost of the product, right? But if you have manufacturing plants in different parts of the world, then you can easily parcel those products to the customers, right? Without including too much of logistic costs. So this is the thing which makes this company's business really impressive, that they have located their manufacturing plants and warehouses around the globe, right? It is a really good and impressive thing from my point of view. Now let's move to the company's website to see more about the company's business. So now as we come to the company's website, you can see here POLYPLEX Corporation Limited has the 7th largest capacity of polyester film globally, PET films globally. They are the 7th largest producer of such PET films. Our polyester capabilities includes both thin and thick PET films in a wide range of thickness and surface properties covering a spectrum of applications, right? So by reading this, we can easily understand that PET films are the hero product of POLYPLEX Corporation. This is the hero product. They have talked extensively about this particular product. So this is their hero product and they are the 7th largest producer of the polyester film globally, right? This is their hero product. And as we move downwards to their about, our diversified business portfolio also includes BOPP, blown PP, PE, CPP films produced in state-of-the-art plants with economic size, integrated downstream capabilities of metallizing, holography, silicon coating, offline chemical coating, extrusion coating, and transfer metallized paper deliver further value-added products. So now on the second paragraph, we can see the diversified product range that they are offering to the customers, right? In the first paragraph, we have seen one thing, that is their hero product and how capable are they in their hero product. And on the second paragraph, we have seen the company's diversified portfolio of the products, right? And on the third paragraph, you will find that how this company is present around the globe. We have a global presence supplying to about 950 customers in 75 countries, right? So they are exporting their goods to 75 different countries across Europe, Americas, the Indian subcontinent, Far East, Asia Pacific, and the Middle East. So by studying their website, studying about the business that they have written on their website, one thing I realized that they understand their business very well, because not every company is able to communicate about their business to the customers so efficiently, right? They have efficiently communicated it to the customers or to the analyst or to anybody who wants to research about this company for the investment. You can see they have clearly mentioned their hero product, right, and what is the capacity they have in their hero product. Then they have shared their diversified portfolio of the product and the different countries that they are exporting their goods. They have shared it. They have shared their experience. They have 34 years of experience in this particular industry. They have shared it very efficiently, all the information. Now if you move to their products, you can see here 4 categories of the product: Ceraphil, Cerakote, Ceralame, and Ceraprint, right? Here you can see these are the 4 categories, and in these 4 categories these are the different products that they are offering. You can see here, right? Going into these will make this video longer, and all this information is not necessary. We have seen about the company's business. It is better for a research to move to the financial figures now. So let's move to the financial figures of the company. So as we come to the balance sheet of the company, you can see here there is not much change. I would say there is change of around 4,000 lakhs in the property, plant and equipment. You can see here. So they have a very steady property, plant and equipment range, right? Their manufacturing is very steady. If you move to their capital work in progress, you will not find major change here. Also in inventories also you will not find major change. Why is that so? Because this company is a very stable company. I think they are holding their ground. They are selling and producing as much as required by the market. This comes with the experience. Many of the companies you will see and you will realize that they are having substantial growth, growing like anything, having inventories, higher level of inventories, higher level of capital work in progress. Okay, I'm not saying that those things are bad, but this thing, the steady growth, is also not bad, right? This comes with the experience. When you completely understand your business, you know how much inventory you will require in such certain type of market, right? So you can see experience here, right? You don't have to take it badly that they are not growing their capital work in progress and inventories are so steady. So you don't have to take it negatively. So as we move to the statement of profit and loss here, you can see that revenue from the operation is also very subtle and very constant. Almost 2,000 lakh rupees increase in the revenue from the operations we can see here, which is also really good. I don't think it is a bad revenue from the operations. Other income are substantially increased. Here you can see in the fiscal year 2021 ending in March, increased, but that is not of the significance, right? These other incomes are not of significance. Because of that, their total income has definitely increased, but we will focus on the revenue from operations only. So as we move to the profit for the year, right? Profit for the year, here you can see it has increased. You will see almost it has doubled up. So there are 2 reasons for that. If you look closely, one is their other income, the increase in the other income, and secondly their efficiency in the cost of material consumed. You can see this year they are having revenue from the operations greater than the previous year, but cost of the material consumed has decreased. So definitely they have used their cost of materials very efficiently this year, so which is a good sign. And the profit for the year has impact from the both other income and their efficient use of the materials, right? So it is a good sign. So if we move to the statement of cash flow, you will find here operating cash flow, net cash flow from the operating activities, again very steady. You can see here almost 300 crore rupees growth. You will find here very steady growth in the operating activities, net cash flow from the operating activities. And cash flow from the investing activities, again you can see here as a great increase, because they have sold their short-term investment and they have purchased very less short-term investment this year. Apart from that, their investment in the PPE is also very low, right? So you might wonder that they are not investing in their PPE, but I would look at it that way, that they are experienced, so they know what is best for them, so they are not going for the major changes, right? And if you look at the financing activities, you will see an outflow here from the cash flow in the financing activities, which means they have borrowed more money, which I would always say that it is not necessary that if company is borrowing, it is bad only for company, right? In some cases it is bad, but in some cases it is good also, right? These stable and experienced company generally takes borrowings when they see some opportunities in the market. So might be they are expecting some good opportunities next year in the market, that's why they have borrowed more money. So this is all from the financial figures. Now let's move to the short analysis that we have carried out for all of you. So if you come to the short analysis of the POLYPLEX Corporation, plastic products is their industry. Their market capitalization is around 8,000 crore rupees, which means they are a small cap stock. Their enterprise value is good compared to their market value, which stands around 8,140 crore rupees. Their ROE is definitely fantastic, standing at 28.35. Great ROC, again great 26.45%. So now these are also the things that you have to consider when we are considering a company, right? You have seen there is not much growth in their revenue from operation, there is not much growth in their cash flow from operation, but still look at their percentage of ROE and ROC, which is great, right? So it's a stable company which if somebody has in their portfolio, which will give constant return. So investors do want these types of constant companies also. In all type of markets, they can give a stable return to you. Debt to equity is pretty low. FII is really good, 10.23%, means foreigners are definitely interested in this company, and because of their presence in the global market, a really great presence of over 75 countries they are present in globally, that's why also FII are really interested in this company. Promoter holding is 50%, 51% almost, you can see, which makes you realize that how good their business is. Promoters are really positive about the business. Their earning per share is 181. Their PE is lower than the industry PE, despite of having ROE over 28% and ROC over 26%. Their PE is lower than industry. So what else you can ask? So definitely this stock does not look as overvalued to me. This stock is definitely undervalued, right? And now if you move to the strength of this company, so consistent highest return stocks over 5 years in Nifty 500. This company with high TTM EPS growth, trailing 12-month EPS growth, this company is having really high, strong annual EPS growth. We have seen 181 rupees EPS. It's a good quarterly growth in recent results. You can see that. Company with low debt, we have seen that increasing revenue every quarter for the past 4 quarters, increasing profits every quarter for the past 2 quarters. A strong cash generating ability from core business, improving cash flow of operation for the last 2 years. Though the change is not major, but there is a positive change definitely. Annual net profit improving from last 2 years. We have seen that because of the 2 reasons this year profits were increased. One was other income, and secondly efficiently uses of materials. And company with zero promoter pledge, FII and FPP or institutions increasing their shareholding. We have seen that almost 11% FIR are vested in this company. So this is it for this research video, everyone. I hope you found this video informative, and if you do, please do share this video, like this video, subscribe to our channel, and we'll be back with another stock research for all of you shortly. Thank you so much for watching.